It's Jay Meisler here. It is June 5th, 2014. Current time is, I'm sorry, 20:45 GMT. And rather than wait till tomorrow when we have non-farm payroll, I figured I will do a look ahead right now. If you remember yesterday when I posted a pre-ECB video, I said that my preference was to see the euro try to react on a buy the rumor seller fact reaction out of the box, and that would set up a new low. Instead, the market went straight down, which is always a worry when it happens like that. It got too one-sided, and boom, we retraced up, and we actually had an outside day key reversal. The euro continues to confound in that respect, but it was basically a weak dollar all around day, and that is something that's a little bit of a concern because it shouldn't be happening before non-farm payroll. So that's as non-farm payroll is a roll of the dice. We'll see what happens tomorrow, and whether the market reacts. So here we are, and we'll go through charts right now, and we'll talk about what to look for. This is a Euro daily chart. And one thing that concerns me in the Euro daily chart is we never had a real trend line going down. And why is that a concern? Because that gives you more of a fluid move with always some backing and filling. Instead, we really didn't have a retracement. This maybe was the first real retracement we've had in this whole move down, actually. And look what here, we had an outside day. And where did it pause? Right here at around 136.69. So that's your first level. There's a level here, 1.36. Pardon the typing. I look like a school kid typing, but when you type with the mouse, that's what it looks like. 136.88. And the reason that's important, that's where you're almost at the top of a 2-week range. It won't show up on a daily chart, but it does show up on on an hourly chart, and certainly in my memory. So you got 136.69, 136.88, then you get up to, looks like around 137.35, and this here is about 137.75. I mean, I can't believe we're talking about these levels, but there is a risk somewhere there. Now, if you talk about retracements, we have 136.91, 137.50, 138.08. That's 38.2, 50%, and 61.8. And the only reason I'm talking about that, and I mentioned it yesterday, and I'll draw it again in my best mouse thing, is this market is driven by stops. Has not had a lot to run in this month-long run up to the ECB, and that's what we've only saw today. We saw a run through stops. So if there are any stops in this area, the market will probably try to go after them. There are really no stops in the downside here until around 135.03. If 135 is the bottom, then the range could be anywhere from 135 to 138, and I can't believe I'm even mentioning 138. But right now, it's if you're short, you're kind of at the mercy of the market. On a Friday and non-farm payroll, the market will be looking to run stops. If it can't run stops, then we go back to the same nonsense again. Now, one thing about that, and I'll mention it one more time, is that you have a pattern, and the pattern has been 8 days in a row where 136 has traded. It looks like 136 would now become the resistance. It didn't hold. Now the question is, does it print again? If it prints again, then we're back into this 135, 137 range. And I guess we're in there for now until proven elsewhere. I don't see the euro, accelerating to the upside, but it really depends on stops and what non-farm payroll shows. If we look at some of the other charts here, and I'll do that really quickly, the 4-hour, we broke that trend line, that channel top I told you about, through the 100-hour moving average, and here is that 136.88 level, and you can see where now it comes from. If not, then we go back into 137.25, 35. If you look at the 1 hour, you figure this one out and tell me what you do with this. So that's basically it. non-farm payroll is a roll of the dice. As I said, if the market sniffs out stops, it's going to run them, and the stops are closer to the up than the downside. And now we're just talking about a position squeeze as more than a fundamental move, but we can't be ruled out. I'm really not bullish on the euro. I know the top is in for the year below 140, but the question is how far the market can squeeze up on a Friday. So just be aware of that when you trade tomorrow. Probably some bids lying in wait for those who are caught out short below 136, let's say. There'll be probably bids lying in wait. You'll have to probably get through 130. Looks like 135.75 to put 137.35.50 in play again. If not, 136.50 is going to set the tone within 136 to 137. On the outside chance it gets above 137, I would say the 50% level, 137.50 should cap the upside. That just covers all ground. Now, I wrote an article, and I know I'm getting some great feedback on some of my articles, and right here, it's called Adapt or Die. For those who didn't read it, just click on it. I think it'll be very useful for you. It tells you how to adapt in the current market. It's actually a two-part article. I think hard about these things. I use my own trading experience, so it's not written from an academic point of view, but a practical trading point of view, and I always like to give practical hints. So here's the link. Click on it. Good luck tomorrow with non-farm payroll. Just be aware what the risks are.